Activist investor engine number one dealt a major blow to ExxonMobil. It gained at least 2 board seats as it pushed for a change to Exxon's climate strategy. Here's Exxon CEO Darren Woods responding yesterday on Closing Bell on the transition away from fossil fuels.
I look forward to continuing to work with the new board members and our existing board members to help drive the plans forward, the strategy that we've got. And of course, as things evolve, we'll continue to test that strategy and our plans and adapt those to the progress that the world's making and society's making in this transition.
Joining us now to discuss what this could mean for the big oil industry is John Kilduff. He is, again, Capital founding partner and a CNBC contributor. And John, first of all, what does this mean for Exxon? What will it mean in terms of its plans, in terms of the projects that it pursues?
It's going to change their forward-looking progress, their plans, Becky. A company that historically has drilled for oil, drilled for natural gas, refined crude oil into refined products like gasoline and jet fuel, it's going to change. They're going to probably get out of some of those businesses. What we've been seeing so far from companies like Shell and BP, that they've sold off refineries because that's one of the biggest carbon problems for their portfolios. And, if you ask me, it's going to be a threat to our energy security ultimately here as we go forward, because they're going to have to shun, or they're going to choose to shun now because of this new board, new exploration and production and new refinery capacity and innovations.
That's the key point, our energy security, and then eventually what that means for consumers, too. When do you think that could be a threat that really pops up if we get to the point where we're not able to produce enough for our own needs?
Well, we're starting to see the beginnings of it. Like I said, several of the major oil companies have already either closed refineries or are in the process of selling them. There will certainly never now be a new one built here in the United States. Not that we necessarily need it, but it gets really easy for us for the global economy, even for supplies to get tight and for prices to go up. We've just gone through a great period where we were relatively oversupplied, thanks to U.S. shale production and other global producers. We're going to go in the opposite direction, and it's going to be painful at the pump. And it's, again, look, all the past recessions really have been preceded by a spike in oil prices. There are other contributing factors, but a spike higher in oil prices was one of them. And the problem that I sort of have with this is that, the fossil fuel industry, the ExxonMobils of the world, they've done an awful lot to help with the environment. Tailpipe emissions, for example, from the 1960s to today, 99% reduction. Every truck in the United States drives on ultra-low sulfur diesel, and the globe went to a similar ultra-low sulfur diesel for the marine fleet globally. So a lot's been done. And the problem that ExxonMobil is getting, I think, blamed for here, or painted with an incorrect brush, is that it's such a big company. For them to put up, say, a wind farm off Nantucket, it's not going to do anything in terms of their earnings, and it's not going to do anything in terms of their portfolio. Whenever you've spoken to Darren Woods or you hear him talk, he talks about doing things at scale, because that's what ExxonMobil has to do. And these sorts of one-off projects don't move the needle. He's been trying to move the needle with different projects like biofuel innovation and carbon sequestration on a huge scale, but that's been sort of overlooked. And here we are now. This is a real sort of threat to ExxonMobil's dominance in the global energy industry.
Shepard Smith here. Thanks for watching CNBC on YouTube.